Welcome back, everyone, to another Apple update in this continuation of this series of buying $100,000 of Apple stock. And like you have known from the last few videos of covering my Apple stock and my stake in Apple, you would know that I've far surpassed $100,000 in Apple. So frankly, the title should be more along the lines of 110, 120,000, but we'll just call it 100,000. It's catchy and gets those clicks. So I thought this would be an opportune time to show you an update on my Apple stake. Where am I now? I've been scooping up even more shares over these last few days and couple weeks, and I thought this would be an appropriate time because today the market had its worst day since June, crashed well over 900 points, nearly 1,000 points down today on the Dow. It's clearly going in a downward trend. However, futures are already up a few hundred points for tomorrow, so at least some recovery there, just a small bit of relief. However, it's been very evident that the market is not in the best state right now. So first, let's cover briefly the cause of the downward trend in the market right now. Then we'll look at an update on my Robinhood portfolio holding all of my Apple stock. And if you have been enjoying my videos, particularly the Apple stock and stock updates, go ahead, just give the video a big thumbs up, smash the like button. This will help with that YouTube algorithm. YouTube will push the video out to even more people, and it does support me and my channel, and it's totally free to do so. There's no reason for you not to do that. So if you go ahead and click the like button, I would greatly appreciate it. The channel has been growing, I want to say exponentially, perhaps you'd say linearly, but I think it's exponentially. Really, a lot of people are coming over the page now, and they're really liking my content and viewing it, and extensively too. People look at all of my videos and they really enjoy the diversity and mixture of what I cover and the knowledge and value that I provide. So if you are brand new here and you have not yet, you might want to consider actually subscribing. Hit that big red button, the subscribe button. Also hit that notification bell as well. That will just notify you every single time I do make a new video. That way you're first line to see it before anyone else gets to it. Don't tell anyone, that's a little secret. You'll actually get the video before anyone else. We'll keep it between you and I. But if you just go ahead and do those two things after you click the like button, I would greatly appreciate it. So what's going on? What's conducive to this massive panic and sell-off right now? The market's basically tanking. Deja vu. It feels like we're back in March, which is crazy because in just a few months from now, it'll be March 2021, 1-year anniversary of the worst of the market. So what's causing all of this? Well, you're going to be seeing a lot more cases in the US. That's the cause of this recent drop. And the global outlook of the economy is quite grim as well. According to some recent numbers we have, the US cases have risen by a record daily average of 71,832 over the past week. This is data compiled by Johns Hopkins University. Meanwhile, coronavirus-related hospitalizations are actually up 5% or more in 36 states, according to data from the COVID Tracking Project. Cases are also rising sharply across Europe. The European economy does not have a splendid outlook either. The recent uptick in cases have led some countries to reinstate certain social distancing measures. In the US, the state of Illinois has ordered Chicago to shut down indoor dining. In Europe, German officials have agreed to a 4-week partial lockdown, while the French government has imposed new nationwide restrictions until December 1st, so many weeks from now. The eccentric host of Mad Money, CNBC's Jim Cramer, he had said, quote, "I think there's going to be a call for lockdowns, the likes of which we've seen in Chicago. The lockdowns without the stimulus equals what we're seeing." He went on to say, "It's a shame because had there been stimulus, we'd then be focusing on earnings, and the earnings are actually pretty darn good." Kramer's referring to a multitude of companies that are reporting earnings very soon this coming week and also next week, such as Apple. Apple's earnings are very soon. We're going to be looking at that. So for example, stocks that have been hurt the most by these new lockdowns, such as shares of United Airlines fell 4.6%, Royal Caribbean shares lost 7.4%, Norwegian Cruise Line and Carnival dropped 9.1% and 10.6% respectively. Tech companies such as Microsoft actually reported better than expected earnings and revenue for the previous quarter as sales from its cloud business grew sharply. However, still, the stock dropped 5% on light revenue guidance. Boeing also reported a loss that was narrower than expected, and the company said its plans to cut thousands of additional jobs for 2021 as it adjusts to the long-term drop in air travel demand. Boeing shares dropped 4.6% today. So today was a great reminder that the turmoil and uncertainty is nowhere near over. The virus has not left this planet. It is here to stay for quite some time, and until more stimulus can be injected into the US economy, no matter who wins the presidency, we might see another drop, a significant one at that, in the market. And speaking of the election, as you guys know, if you've been following my updates, I will actually be doing some special election coverage actually the night before or morning of, very early wee hours of the morning. Look around probably, I'd say, close to 1, 2, 3, 4 in the morning. Around that hour of election day is when you'll see a video released. I'm actually doing some electoral coverage, giving you my thoughts and opinions. Who do I think could potentially squeeze out a victory here, or will it be a landslide? All of my thoughts will be laid out for you early in the morning of election day. I will be voting. I'm in New York, but we'll talk about it then. So let's quickly look at the market and Apple and the performance today. The Dow dropped 943.24 points, or 3.43%, about 3.5% today. Very vicious sell-off, and we're back in the 26,500s right now as far as the Dow. Let's take a look at Apple now, as that was significantly impacted. Apple today dropped 540, or another 4.63%. It is now back to 111.20. After hours, there was some minor action which brought it back above 112. I scooped up some more shares today, you best believe. Over the last 5 days, it is in the red. We're looking at about 415 down in the last 5 days. 1 month still in the red there for the last 1 month. Looking at about 289 down for the 1 month chart. 6 months does still remain in the green, obviously. However, you could see it has been stabilizing and not really going in that clear uptrend direction which we want to see ahead of the new Apple product launch that we've discussed in great detail over these last few updates. If you haven't seen the last few Apple updates, the links will be down below in the description. Apple's basically right now heading back to its correction territory that we saw off that previous peak. Remember that peak? It was 134.18, and that was on Tuesday, September 1st. Dropped very slightly the next day, and then it crashed quite vastly the following days, and it was in correction territory, and that's when everyone was saying Apple was a buy. Apple is a picture-perfect buy. You couldn't have calculated it better. It's the best measured correction territory in history, and then it came back up ahead of the Apple product launch and some good earnings and potentially some good revenue with this holiday season, and now it's slowly drifting down slightly, but that doesn't mean it's not time to buy Apple. It's always a good time to buy Apple. So that's how the Dow and Apple did today. And now let's head over to my Robinhood portfolio and what that means for myself, how many shares I now have after scooping up some more. Guess what? We are almost at 1,000 shares. You'll see in just one moment. So let's go right into my Robinhood portfolio. Here we go. So we're in Robinhood now. Fortunately, over the last couple of days, several $1,000s of value have been scraped off the total market value of my portfolio. It's actually quite low now, even though I continuously add more and more money over these last few days and couple of weeks. I've continuously made more deposits and transfers from my bank, but the numbers only continue to go down. That's okay. Just buy the dip, as they say. So where are we at right now? Well, we're at $120,707.12. Today alone, 5,645.57 down, or 4.5% to be exact, wiped in value off my portfolio. Let's quickly look at the 1 week here. 1 week we started. Now do remember that I transferred some money in here. I probably called about $1,000, a little bit over just the last couple of days. But we started the week at 126, about 126.6, and today now we're at 12700, that is. Over the last 1 month, it is actually in the red, my portfolio. Not as bad. Still, though, about $2,500 down for the last 1 month. 3 months, I think it should be up. Hopefully it's up. There we go. You got a little bit of a green there. Just 1.5% up for the last 3 months. And the 1 year, you had a better picture. You can see very clearly, just looks exactly like the Dow in actuality. There's the pandemic. There was the peak there. There was a sell-off on Apple. It came back up, and now we're going back down again. So hopefully an upward motion is next, but so much uncertainty with stimulus and the election and the global outlook of the economy. So many variables here that we just don't have control over, and Apple doesn't have control over either. It's not Apple's fault. It's not Apple's fault for this recent decline. So that's just something to keep in mind. There's no reason to panic, no reason to shoot yourself in the foot and sell. Keep holding on. So if you haven't seen yet, let's go to Apple now. Apple, I now own exactly 991.798028 shares. Makes up now 92.1% of my portfolio. Definitely the majority. I still want to sell Store and Pfizer after the vaccine. I do want to contribute that money. That way this entire portfolio is just all Apple. Market value of just Apple stands at $111,170.64 to be exact. That accounts for exactly $5,395.98, or a little bit over 5% in total return. That number was a lot higher pre-pandemic, of course, and just weeks ago during the peak. Average cost, though, I always like to look at the average cost because this average cost is beautiful. No matter how high or low Apple gets, my average cost really does not budge, which is shocking because I'm contributing a lot of money into this. I've already maxed out my 2020 Roth IRA, getting ready to contribute to my 2021 Roth IRA once the new year happens. That would also mean that I'd be able to contribute less to Apple, but it's okay. Apple will hopefully be on the rise by that point. Hopefully by 2021 we have that vaccine, and I don't necessarily have to start chasing the stock. So it's all good, but my average cost does stand at $106.65. I keep buying more and more, and it budges just pennies. Just pennies. It will go up 30 cents. Crazy. It just goes to show you how long I've been buying Apple and how much of a stalwart, staunch supporter of Apple and the company and their vision and Tim Cook's leadership I have been. Let's quickly glance at the analyst ratings on Robinhood for the rank of Apple stock, according to many, many different analysts. And 58% still say it's a buy, with 33% saying hold and just 10% saying sell, even after this decline. So great ratings, and I'm very happy and pleased to see that most analysts are in fact saying that this stock is still a buy. And here are the estimated earnings for quarter 4. We're actually going to be having the actual earnings available October 29th after hours. October 29th after hours. Today is the 28th, so tomorrow after hours is when the earnings are coming. I'm doing this video ahead of the earnings release and announcement, so we'll see what happens. The estimated earnings right now are 71 cents per share, 71 PS per share are the earnings, and that's for quarter 4. Definitely lower than quarter 3 and quarter 2, but if you take a look at quarter 3 and quarter 2, and even quarter 1 and quarter 4 and quarter 3, it's quarter 3 and quarter 2 of 2019 seem to be right on the money there. I believe it was exact, maybe a penny off. You can't even really see the discrepancy there. But if you take a look at quarter 3 and quarter 2 and quarter 1 of 2020, it beat estimates. That's during a pandemic. It beat the estimated earnings per share during a pandemic. Just look at quarter 3. It's quite significant, that discrepancy there. You can really tell the difference between the expected and the actual earnings. You could really see it. It's quite a visual, striking difference. So we'll see what happens with quarter 4. There are expected to be, I would say, a beating of estimated earnings. I do believe that they'll beat estimates once again for quarter 4. Can't be exact, but we'll see what happens. Apple's market cap has now once again dipped below $2 trillion, has lost the 2T, the big $2 trillion market cap crown. Once again, it has been dethroned of that after being dethroned after the sell-off from the peak just weeks ago. So it is now 1.93 trillion, no longer 2, but quite close and still a substantial company to say the least. I still remain supremely confident in Apple's ability and their vision and the visionaries who are in charge and the administration of Apple. Very, very confident in Apple still. I have not yielded unwavering support for Apple. I continue to buy more, and you can mark my words. We're now just less than 9 shares away from hitting 1,000 shares in this Robinhood portfolio. And so once you have 1,000, no matter what the price of Apple is, you just call it 1,000. Of course, if there's a stock split, that number could actually increase. If there's another stock split, maybe in the next few years, perhaps, potentially. I don't see it coming, though, for quite some time, as Apple is estimated to still go up. It is projected to hit around $200 in the next couple of years. Within the next couple of years, could be faster than that, but I don't see a need for a stock split anytime soon once again. That's where I stand right now with Apple. More updates are to come after we have those earnings in and we have the earnings per share and any revenue announcements and reports. I'll be doing another Apple update rather soon, but of course with the election right around the corner, that's definitely going to eat up some of the content on this channel, so you are going to want to stay tuned. But if you enjoyed this video, give it a big thumbs up, smash the like button, and if you want to see more of this my channel, including election coverage right here on this channel, all my thoughts and opinions and the facts too, we're going to be giving it to you straight, no sugarcoating, no one way or the other. I'm going to be trying to be as impartial as possible for you guys and just only for you guys. So you are going to want to head and click that big red button, the subscribe button. Also hit that notification bell as well. You don't want to miss a beat. Everything's me right here on this channel. Looking forward to seeing you in the next video.